Now the patterns I'm going to show you and I basically use are these patterns. The ABCD pattern, where AB equals CD, the Gartley pattern, the butterfly pattern, the three drive patterns. What is the common denominator in all that? This. A very fascinating thing. They all have Fibonacci numbers, rather ratios, which tie them together. So let's draw them and see what it means. This is what I call ABCD pattern, as I say on the top, where what we have is AB equals CD. What I have here is AB equals CD. You remember we first saw that in the one of the first charts I put up, where I was showing equal moves. Some of them were with red lines, and one was like this. It was the same thing. I only put the red lines so I wouldn't have to show this one in between. It would get too mixed up, too many lines. Basically, what we have here is we have a powerful pattern which is, if we have a move from A to B, then it retraces back, and what you're saying, once it goes above the B, above this line, what you are saying is, this is the area I'm interested in. This is 100, this is 150, this is 130. I'm interested in this area. I'm not interested in anything between. And I want to sell this area. You sell at the D. That's why it's a bearish one. So along here, you do nothing. You wait, which is a very, very nice feeling. To wait. It's quite difficult because you want to be involved. Well, I'm telling you, don't be involved. Go and do something more interesting. Put an alert, and when it gets there, go. The geometry here is that AB equals CD, nothing else. Now there is a ratio here in this triangle, which is Fibonacci ratio. I'll show you later how we do that. This is the bullish. All it does is turn it on its head. Again, here we have A, B equals C, D. So what do we do here? We wait. We see the AB. We do nothing. We see the retracement, BC. We do nothing. And then it starts to go down again, and beyond the B, then we can draw this. And we say, I'm interested in this area. Now, let's have an example of a bearish ABCD. Bearish AB equals CD pattern, ending at the 618 Fibonacci ratio. There is the ABCD, A, B, C, D. And it so happened that it finished at the 618 of this swing. If you notice, this is complete different things. This is one swing, and I draw a Fibonacci ratio. And then as we go up, it might stop here, yes. Why? Because it's a very important ratio. It might not stop. It might do an ABCD, it might not do, it might do whatever it wants. But as it goes up there, and I've already drawn the ABCD, what I have here is I have two things coming together. And I start to get excited. Because I have A, B equals C, D, and I have this. The point is this. As you go up, you have this area here. So you have an order here, or you have an alert here. Two possibilities. If you have an alert, you go and you look at it. If you have an order, standing order, regardless of how it gets there, then you obviously get filled. You don't wait for a confirmation. Once it gets there, so there's no question. If you want to wait, see what happens, then you look for confirmation. What kind of confirmation? We can discuss this. It depends. But the point is that there are very few rules which I use not to enter a trade like that. We'll talk about them later. But if you want to say, I want to look at something else, whatever, another time frame or whatever, then that's different. But this is not part of the pattern trading here. This is very clear. These are patterns which we look for tops and we look for bottoms. They are reversal patterns or they are continuation patterns, but they are not going to be in here patterns. However, of course, as it goes up there, that might be a top. It can fail any time, like anything else. But it's really, some of them, I'll show you, we'll go back, are reversal. They really go for the high.